Hey everybody, this is Trader Steve. We're going to do a weekend update here, and we're going to start off with the index, the triple Qs, the NASDAQ, and on the weekly chart here, we're looking at a red candle of death here. We had the last one back on December 16th right here, led to some weakness, and then the market recovered a little bit, went to the top of the range here. And now maybe we're coming back down to the bottom of this range between these two red lines. We'll see what happens. It seems like Trump and Elon Musk are starting to spook people. And consumer sentiment is starting to fall off the cliff. And we'll see what happens, because all I can tell you is that you cut $500 billion out of the federal budget and a recession is coming. So I think anybody will know. It's just no different than the Fed cutting $500 billion out of the money supply. And if you do that rapidly and not slowly and carefully and planned, then recession is coming, and it could even be worse than the recession. So we'll see what happens. But right now we have a red engulfing candle on the QQQ for the week. Caution is advised, and if this thing breaks down where the 9-day moving average starts crossing the 28-day moving average, buckle your seatbelts, folks, because it will get rough. And so now we're going to go to the SPY. And the SPY, same thing, red engulfing candle. The last time we had a kind of red candle of death was back here on the week of the 16th. That's when Jerome, threw water on everything about cutting rates, and we have since kind of just been this chopping pattern between these two red lines. But here's your red engulfing candle. So whether we come back down to the bottom of the range or recover, we're just going to have to see what the news feed is on Monday. And here's the Russell. The Russell's really starting to break down, and if it starts breaking down below this 213, 214 level, watch out, because the Russell is the weakest of the indexes. The diamonds are showing a big red candle here. It's not engulfing, but it still shows the sellers are in control, and we're a long way away from the 200-day moving average. And so there's room to drop here, and we'll just have to see what Monday shows. And if these people in these town halls with the GOP congressmen start getting ugly and they start throwing eggs at these guys and it gets ugly, watch out. But if they keep cutting and they don't do it methodically and logically, which I don't think anyone has a plan, then get ready. Here's the transports, another big red ugly engulfing candle. It's not looking good because all the indexes are showing weakness. Here's gold. Gold is beautiful, and that's kind of telling us, danger ahead. Something's going on. We just have to figure out what the smart people in this market see and try to figure out how to go about it. Here's the GDX, the gold miners. I'm heavy into this one. And I sold premium Friday when this thing kind of broke down from the prior low of the prior week. And I don't know if we're going to have a little bit of weakness here. And because Newmont reported, I think it was Thursday, and for some reason, they hit it real good. They're selling assets, and maybe their gold production wasn't as high as they thought it would be. But after you sell assets, hey, gold production's not going to be what it was in the prior year. So I sold current week premium, put some money in the bank, and we'll see if we have a Monday, a big green candle, and I get called out, or I make some money on this going forward for the rest of the week. I'll try and throw a video out on the nugget, which I'm heavy into. But my thing is, I'm just gonna be loading gold and these kind of stocks, because I think things are just going to deteriorate as we go forward, which means you can make some money, but no one's really made any money going to the downside in this market in a very long time. And I think when it finally cracks, watch out below, folks, because it's going to be a wild ride.